Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, January 29, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Continuing with the melt-up operation theme, at new highs, in an uptrend, we have to respect the tape. The market can always travel a lot farther in either direction than most people think it can. That's why we look for a sign and or signal of a trend change, which gives us something to trade against. That's trading 101. She's getting far extended once again from home base or the 20-period moving average, represented by the red sloping trend line. And we know another routine, and check this out. She's approaching $500. Now, we don't know when or if she gets to $500, she meaning the SPY. However, the closer she gets, the more they're going to get sucked into the next really big fat round number of 500. Sometimes they come up short, other times they spike them through. Now, check this out. Just using garden variety symmetry perspective. Let's take this high here and this low here. So what we're saying is we're using the distance from that pivot high to this pivot low. It's roughly, and I'm rounding here, it's roughly 50 points. So how does this work? And this is right out of the course, Lazy E-mini Trader. You take the 50-point differential here, you take it up from the breakout area, meaning above the former high over here, and you take the same 50 points, and what do you get? Not 503 and change, you get around 510. Doesn't mean they have to get there, it's just the point of the exercise. A little symmetrical exercise on a Monday. What else do we have on the docket this week? We have Kabuki Theater, the FOMC interest rate announcement, Jerry's presser. They have a two-day meeting that begins on Tuesday, tomorrow, and culminates Wednesday around 2 p.m. is where the fireworks can begin. Can we get a melt-up or continued melt-up blow-off operation? The answer is absolutely. We don't know why they can't do that. Can they pull the rug out and drop the tape a considerable amount of points on whatever Jerry says, whatever the FOMC says or does? Can they do that? Yes, they can. There's no reason they can't. Let's just do a quick review. The trend is your friend. Daily chart getting extended once again from home base. Look what happens each and every time they get extended from home base. Extended up here, they pull back a little bit. Extended over here, they go sideways, let home base creep up to price. Under it, they pull back, get extended from home base, they come back to home base. They're getting extended. It doesn't mean they can't go higher. It just means at some point, guess what? They're going to pull back toward home base. It's an awareness at this point. We look for signs and signals of a trend change to put capital at risk. By the way, something else to add into the puzzle, from a daily chart perspective, they're coming into an on-time type of situation, into turnaround Tuesday. More interestingly, the weekly chart this week is in an on-time type of situation. We have Kabuki Theater. We have tech earnings on deck this week. We have the phony jobs number at the end of this week. We have no shortage of information that can move the tape. Very quiet market today in the continued melt-up operation. Low volume, low participation. What follows low volume and low participation? Heavier volume and heavier participation. Somebody got a little nervous today. We'll take a look at the VIX real quick. We don't look at this a lot, but the VIX was up about 2.7% today while the market was melting up. That's interesting information. There are protection buyers out there. Put protection buyers. By the way, look at this candle. We caught this just on the spot, meaning in real time in the live room today when the VIX spiked up over 15 and pulled right back. Look at this tail they put in on a 15-minute chart. This was a real print. It was actually up there. Something was going on. We'll see if that maybe is a hint, maybe a flare up in the air from some kind of a warning signal perspective. We'll see. We've got our eye on things. What about inside the numbers? Did anybody make money today inside the numbers? Let me know in a post under the video in the comments section. You already saw it was a slow tape, wound up to be a melt-up operation. We had an early pivot. You can read the rest of the notes, pause the video, double-check the work. Let's start with the pivot. 487.45 was our early pivot. Above is bullish for a floater leg higher. Below, she can pull back a little bit. 487.45 was the early pivot. We like visuals. Right of the vertical is today's activity. 487.45 is the blue horizontal trend line. That was the pivot. She's bullish for the floater above. You can see here, even in the first candle, first 5-minute candle of the day, the low was 487.46. We talked about it in the live trading room. The writing was on the wall. That was the pivot. As long as they stay above it on candle closes, and not just 5 minutes, but if she sustains price above, it's bullish. She's going higher. Pause the video, read the notes, go back to the chart to double check the work. First order of business would be Friday's high. Then you have a mathematical number I've got at 489.73. She got there and kept going. Pause the video, read the notes, go back to the chart to double check the work. Early scoop, we've got the pivot. If they get below, there's a buy, never got there. Short trade would be sooner than later, up in this neck of the woods, up to 489.73, give or take. That's in the morning session. Sooner than later, that doesn't count when it's in the afternoon with no time on the clock. Not so smart to short a melt-up operation into the closing bell. Pause the video, read the notes, go back to the chart to double check the work. It was a quiet, low participation melt-up operation, not a trader's tape. It will change. It will likely change this week. How about stocks on the move? We only had 2 on the board today. GCT and PHG. GCT reached their entry objective. The other one did not. So the other one's off the board, but we will take a look at GCT among a few others. But wait, there's more. GCT getting a haircut at the opening bell. They did a bit of a Macarena in front of the first number. We talked about it in the live room in real time. Didn't like it anymore. I said, wait for the second number. They somewhat did a Macarena around the second number, but did the deal anyway. And you can see what happened into the end of the day. Look at the low in the last candle of the day. 22.50 against 22.51. Funny how that works. Sure. We had some interesting opportunities come up in the live room today, even in a quiet market. We traded Apple as a group today. 190 was the bounce place. We got $1. I said I was taking profit at $1. You didn't have to, but I was. We did. A lot of traders did. It was a nice base hit to start the week, first thing in the morning. How about Intel? Intel was given out in the live room. 42.81 was the number. They hit it to the penny and bounced. Funny how that works. A firm was brought up in the live room. It was a short opportunity. The zone was 43.80 to 44.27. You see what happened. They went to the top of the zone. They went back down after that, and you're looking over here. So if you average the 2 entries, $44, they came down to 43.25. Nice trade. Even gave you another bite at the apple down lower later in the day. That's called overhead resistance for a firm. Live room trade. What's going on over in Camp IWM? We don't need these numbers. What we do need is the chart where they're above all the moving averages. Trend is your friend. And a lot of you will be looking at what looks to be a head and shoulders inverse head and shoulders formation. It is not. One of those things taught in the course, lazy E-mini trader. They're at this gap up here. Get above the gap and they'll start working their way up to 200. Spike above 200. Start working on this breakdown candle high at 203 and change. Up in that neck of the woods. The trend is your friend above all the moving averages. Where does the weekly chart? They ran a test of the 200-week moving average 2 weeks ago, and here we are, bounced off of it. The trend is your friend. They want to get to 200, obviously. It's not that far away. What about the folks down at the transportation department? The weekly chart almost looks the same as Camp IWM. Daily chart, eating time off the clock above all the moving averages, doing what? You got it. Building energy for another move higher. To where? To challenge these highs here, and since they're eating time off the clock right under these highs, they're likely building energy to go through to get higher than these highs. Take the market at face value. We're the umpire calling balls and strikes. What about the Q people? Trend is your friend, eating time off the clock, grinding higher above all the moving averages, extended from home base, of course. A lot of markets are extended from home base. A lot of things are extended from home base. They will come back to home base. You can't guess as to what time and day that will happen. You wait for the market to give you the sign or signal of a trend change. It starts from an intraday perspective and it morphs from there. What about the XLF? Anything wrong with the financials? No, they're in an uptrend. Trend is your friend. If the financials are not falling apart and they're up with the market, at least have some kind of relative strength, then there's nothing wrong with the market. They didn't have intraday relative strength, but they're up. The trend is your friend. Nothing wrong with the financials. How about smash mouth? Update today, above all the moving averages. Trend is your friend. I know it sounds like a broken record, but look up here. This is where they were extended from home base. You could see the distance, and there's no measurement for just how long that means they're too far. There is no measurement. It's just the point of the farther they get relative to where they've been in the past, relating to the 20-period moving average, you can see that they're extended from home base. So they like to come back toward home base or eat time off the clock, let home base creep up the price, combination of both. It's a moving average. It's an average. Over time, it will average out. That's why you can't pick a time in a day when they're going to revert back to home base. It doesn't work like that. We use these things as guidelines, as tools, just like the sign or signal of a trend change is a tool. Pete Buttigieg is a tool. Nothing against the guy, but he's a political hack. He has no business being transportation secretary. Let's check in at the Fab 6 or 7 just to see where we are. Amazon, 163.50 is a target. They're still heading toward the target. That should be overhead resistance when they get there. Apple, we saw that already, but here's the daily chart. 190 was the support today. Now let's look at this daily chart objectively. We're the umpire calling balls and strikes. We're just looking at the chart. We don't care that it's Apple. If it's orange, banana, I don't give a hoot. The first thing that really jumps off the chart at me is you have a lower high situation. So there's a high. Now you have, wrong tool, a lower high situation over here that was made the last few days. Now, getting above that high, they'll challenge the former high, and then that lower high thing is off the table. But right now, it's on the table. Why is that? Because we have a lower high. We just take it at face value. Now, we go over to the weekly chart, and we get rid of those little lower high markers, and we say, what's going on here? Do we see a lower high? Yes, we do. But what we also see, which is more important, is the weekly trend above all the moving averages. The trend is your friend. Now, if she were to get below the moving averages and below this last breakup candle low in the sequence of about 180, then that's something different. Then the lower high would have taken hold. But right now, we have to respect the trend is your friend above all the moving averages. I say that's the dominant thing. Now, you go out to a monthly chart and you can't trade off a monthly chart. However, do you see lower highs, or you just see eating time off the clock up in the upper range near the all-time highs above all the moving averages trending higher? Is that what you see on the monthly chart? Because that's what I see. How about Mickeysoft? Trend is your friend. Melt up operation. How high can they go? Who knows? 4.25, 420? It's a melt up operation, getting a little bit far from home base on the weekly chart. Daily chart's far from home base. They will pull back. You look for a sign or signal of a trend change. You don't guess at it. Does Google look any different? No, it does not. Looks the same as Microsoft. Uptrend melting up, above the moving averages, above the 20 period or home base, all of the above, same routine, different stock, part of the Fab 6 or 7. NVIDIA, Mr. and Mrs. Monster stock. They're extended on all measures. However, it doesn't matter. It's a monster. It's a fan favorite. You're very difficult to step in front of a thing like this. It's like stepping in front of a freight train. If you're long, you let it go. If you're flat, you watch it. You're a spectator. Same routine with Meta, former Facebook. Melt up operation. Trend is your friend. There is nothing wrong with this. They are, and it's easier to see on the monthly chart, at new all-time highs. There's nothing wrong with this. You let them go until they run out of steam, and they will retrace a big portion of this move at some point in time. Not now. You have to wait till the market tells you she's done. She's not done as of today. Tesla, the Lone Ranger that's having trouble. It's a single edition trouble child from the Fab 7 group. Well below home base, stretched. Rubber band situation, trying to snap back. That's pretty much what's going on here. It's in a firm downtrend. The only thing you see here is if they get above the high from, what day is this? Thursday of last week. The high is 193. If they get above the high, they get into no man's land. So then they go above 200, 201, and then go to fill this gap over here. That's all you have from the long side. If they can't get above this high here from last Thursday at 193, then they're just going to eat time off the clock and build more of a bearish, flaggish kind of situation for another leg lower. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.